Before you place your next crypto trade, watch this. Tighter global regulations, institutional flows, new altcoins taking off. 2025 might just be the defining year for crypto. Are you ready? Hi there. My name is Francois, market analyst here at ATFX Africa. And today I am joined by Callan from Bitget to unpack the state of crypto in 2025. We'll dive into what's changing, where the smart money is moving to, and how traders like you can stay one step ahead. Callan, welcome to today's episode. How are you doing? And can you also just tell our viewers what you do at Bitget and what your company is all about?
Hi, Francois. Thanks for having me on the show. Nice to be here, and great to be able to share this bit of experience with your audience. So I'm head of growth for Africa for Bitget. For those that don't know Bitget, we're a global platform established in 2018. We obviously specialize in the LATAM and European markets, and we do have an African presence as well. So we are a licensed CASP in South Africa, and our largest markets in Africa will probably be Nigeria, Kenya, and then South Africa. So part of my role is to obviously grow the business. We look at the retail user as well as the institutional business as well.
Absolutely fantastic. Callan, you mentioned your CASP license just now. So with regulatory crackdowns increasing worldwide, how is Bitget adapting in 2025? Are you seeing platforms creating separate compliance safe windows or new geopolitical geo-target services? How are you guys adapting to this?
Yeah, it's a great question. Regulation is great, especially across the crypto industry. I think the crypto industry has had a bad name for a number of years, and there was a lot of issues around cryptocurrency. So the more regulated the industry becomes, the better it is for the actual underlying user. We're obviously a global platform, which means we're regulated in a number of different jurisdictions. So we have to apply to a number of categories in each of those jurisdictions. It does become a lot of monitoring and compliance work. But from an internal point of view, we're constantly training our staff, compliance monitoring. And in South Africa alone, like you mentioned, the CASP license, there's been a number of regulatory changes, such as the travel rule. We've had to implement this. So, we're all for regulation. We believe it provides a lot more credibility to the industry. And we've got compliance teams, legal teams that are monitoring the state or the regulatory affairs that come up in each of these jurisdictions. It does become a lot of work, but it's part and parcel of the actual industry. You've got to be compliant, you've got to be regulated. And also we do try to assist regulatory bodies where we can as well.
Absolutely fantastic. On my previous episode, I actually had my guest was more on the institutional side, and you just mentioned that you guys also offer services in that regard. So I wanted to find out from your perspective, what's the most interesting trend you are seeing with your institutional clients? Are they leaning into derivatives, spot accumulation, or DeFi exposure? Like how's things moving on that end?
Yeah, so the institutional business is a very big play for Bitget. Being an international platform, we do try to look at the institutional partners that we work with. We have a number of institutional products that can support traditional finance institutions coming into the crypto space, such as our API connectivity. So we do see a lot more adoption from the institutional place, and it actually starts with my background. So my background is traditional custody. We've seen a couple of the South African banks now rolling out digital custody, which is great because custody is your basic framework or foundation to being able to grow the institutional business. So having a regulated custody business that holds these assets on behalf of institutional clients such as asset managers, brokers, or even banks that have retail clients that want to hold those assets with those banks. Again, like I said earlier, it provides the credibility that's needed in this market. So we're seeing a lot of traditional banks now moving forward with this. As you might have seen last week and the week before, I think Signia and Discovery have both come out with Bitcoin ETFs or funds, which are basically benchmarked against the BlackRock iShares Bitcoin Trust. So the institutional place or the institutional business seems to be adopting crypto, especially in South Africa, a lot quicker and a lot quicker than we actually anticipated. We do try to push the agenda. We've had a number of events where we talk about digital asset adoption. We see a lot of payment companies coming to us with regards to converting USDT to US dollars and vice versa. So we support the institutional business quite a lot, and we believe that this is the growth that's needed to really boost the crypto industry. And when the institutions get on board, it starts filtering down to the actual retail user and actually benefits the retail user. You drive volumes, you drive pricing, and it becomes a lot more accessible. With the likes of the ETFs that we've been pushing for a while, to see these coming on board slowly but surely, it drives another asset class for the retail investor to look at.
Speaking of ETFs and all these various products that are now being incorporated by institutions and so forth, I mean, when we talk cryptocurrency, we can't not talk about Bitcoin and Ethereum. So could you share your view on Bitcoin and Ethereum's price zones? Which are the next critical levels that traders need to watch out for in the coming weeks, especially now that we are heading into, Q3 of the year? Like, what is your viewpoint on this?
So across our platform, we still see Ethereum as one of the most traded crypto assets, along with Bitcoin. I think obviously the hype around the Bitcoin strategic reserves, which were being created across different zones, especially the US, and what we've seen replicated in South Africa now, has obviously helped push the price. I think going back to Ethereum, it's sitting at about $2,400 at the moment. We see it really trying to push the 2,500 mark. I think if we can get to 3,000, that would be a really good price point to look at. And there's a lot of factors pushing it in that direction. I think one of those is obviously the increase in Ethereum ETFs and the regulatory framework around that. So, if that continues, we see that price that price could definitely be at the $3,000 mark before the end of the year. Bitcoin,
Zero commission on stocks? Yeah, nothing. What if you could get this value today? Turns out you can. Join ATFX now and let's get you started.
Today we're sitting at about $106,000. We could see that increasing as well, with obviously the adoption of these strategic Bitcoin reserves and the funds that are being launched around Bitcoin, and obviously investors seeing it as an actual storage source or an alternative asset. There's a lot of hype around the strategic reserves, which is pushing the price. We see a lot of people and a lot of institutions starting to hold it a lot longer. So I think the strategy around that, if it can maintain this price level, then I think we could see probably a record level before the end of the year. So just sitting at about 107,000. I think yesterday or the day before, today 106,000. We could definitely see the price increasing if the sentiment stays the same.
Well, I'm loving that, especially for the cryptocurrencies that I'm currently holding. So that's definitely good news for my portfolio as well. And you're talking a lot about institutional volumes and institutional flow, and how the adoption of this is benefiting crypto as a larger commodity. But when we discuss these rising volumes within institutional trading, what is the lesson that you believe that retail traders can take from and observing that specific flow?
Yeah, so I think for the retail user, the crypto space has become a lot more regulated, which means there's a lot less fear. We see retail clients getting more and more involved on a day-to-day basis. We see the average retail user trying to diversify their portfolios. I think with the younger generation coming up, not wanting to invest in the typical types of stocks and funds that we were raised on, they see crypto as a legitimate investment option, which it is. So we do see a drive in retail growth there. the institutional drives as well, especially across the stable coins, payment companies across Africa that we service, really looking to push the stable coin agenda. That really drives the volumes. We see a lot of demand for USDT, USDC versus USD. So, those volumes are increasing on a day-to-day basis with regards to money transfers across Africa. And it filters down to the retail client. At Bitget, we always talk about digital assets and digital asset adoption. As an example, we've got a Bitget credit card, which is Visa backed. So your digital adoption now becomes digital transaction. So more and more people, are using it as a day-to-day bank account. I think the other retail plus is, products that a lot of the international platforms are offering now, the staking, the APR rates that you do get on your USDT are a lot more favorable than the actual local banks. Having a USD an account with USD savings, obviously as a hedge against the ZAR, you're probably getting about 1% at some of the local banks. Cryptocurrencies and crypto platforms now are offering anywhere between 4 and 7%. So it actually becomes an investment option to actually hold those balances in USDT. So there's a lot of plus points for the retail investor to start looking at crypto, and obviously the options and the incentives that are available to them for holding this asset.
Absolutely. Regarding the card that you just mentioned, that is available to South African investors and traders?
That's available in South Africa. It's a great product that we've offered for a number of years now. It's linked to your actual Bitget account, and it works off the spot USDT balance that you hold in your account. We're really trying to push the card now because we've heard a lot of stories about Bitcoin enabled towns across South Africa and on the Garden route. I think they got quite a lot of play a couple of months ago, which is great. But you don't want to be limited to that. Having the card available now for Bitget users, as you can use that card anywhere. So it's one of our strategies. It's basically our slogans is spend crypto anywhere, anytime, globally. So having a single card that you can use here, you can use locally. I swiped at a Mr. Price Sport a couple of weeks ago, which is great. We really trying to move from talking about this digital asset adoption to actual digital asset transacting now. And I think South Africa is ready to actually start transacting with digital assets. As we can see, and as like I mentioned before, the stable coins have already proved that. The amount of people that are using stable coins to transfer money is a great example. And I think, the more people get familiar with crypto and actually being able to spend it and use it, they'll actually see the value of it.
Absolutely fantastic. Thank you for that. So shifting the conversation now to altcoin, within that specific sector, what new altcoin is showing genuine momentum or adoption, or what would you say, what's the next one to look out for within this specific space?
Yeah, so on our platform itself, I think we've probably got about over 800 coins. So we launch a number of launch pools on a weekly basis, and depending on which country and who adopts and who adopts whichever coin gets adopted first, just proves the popularity of it. So we've launched coins such as Humanity over the last week, DMC, Pi. Pi has done really, really well. But I think the most attractive, and obviously with the most real world use case scenario would be your real world assets, or your tokens that are tokenizing real world assets. And I think that would probably be your day-to-day stocks. We've seen a number of companies coming to us looking to list tokenized stocks, which is, I think, is going to be the next boom in altcoins or tokens, because it basically fractionalizes your real world stocks, so your average South African who might not have access to the likes of a Tesla stock or a Microsoft stock or any of the stocks that they really keen on buying at $1,000, it's exactly like Bitcoin. You don't need the $107,000 to buy the Bitcoin. You can now buy that at a fraction. So being able to hold that on a single platform where you'll have your cryptocurrencies, where you'll have your tokenized stocks, I definitely believe that's going to boom over the next few months. It makes the investing world a little bit more accessible to those people that didn't have the opportunity to before. So we're constantly talking about democratizing financial markets, and I think this could be a great opportunity.
That's absolutely amazing. So if I'm understanding you right, so that will actually allow various retail investors to trade, if I could put it in such a way, traditional assets, but trade it in a brand new way and not just relying on the traditional stock exchanges.
Correct. Yeah. So it'll basically mirror the pricing of a typical stock. So instead of having to open up a brokerage account and go and buy one Tesla share or one Microsoft share, like I said before, you'd be able to just buy the token, and you'd be able to buy it at a fraction of the price. So if you wanted to buy 5% of that share or 10% of that share, you'd be able to actually purchase that.
Amazing. Speaking a little bit about risk, in your view, what is the most misunderstood or ignored risk that retail traders should take more seriously in today's market?
I think it's like any asset class. I think understanding the volatility of the markets, understanding that that crypto is not just a get rich quick scheme, which we've seen in the past, and a lot of people believe that they're going to invest in a crypto asset and see this skyrocket or go to the moon, as we always hear, within the next few months. As we discussed at the beginning, with the increased regulation that's come into the actual market, with the adoption or financial institution adoption, it's made the crypto market react a little bit more or similar to a traditional market. So we wouldn't say the risk is probably the expectation. We would advise people to start looking at it as an investment class, like I mentioned before. You can buy your crypto now and you can stake it, so you can actually earn a decent APR on that. But you've also got to buy it as a long-term asset. We've seen bull markets, we've seen bear markets, we've seen stock market collapses, and there's always a risk involved. So the risk would be, to look at the product that you're actually purchasing, the asset that you're purchasing, have a good understanding before you purchase that. And obviously, it's like any investment, you've got to have the income or the disposable income to be able to invest that and actually wait for it long term. And I think that's the issue we've had in the crypto market. There was a lot of get rich very quickly, and there's also a huge fallout from that as well. So yeah, we'd encourage people to obviously look at it as an alternative investment class. Look for the long term, monitor the pricing, and yeah, treat it like a traditional investment. You're not going to get rich tomorrow, but
super tight spreads. Yeah, tighter than your jeans after Christmas lunch. What if you could get this value today? Turns out you can. Join ATFX now and let's get you started.
If you are holding it long term and as part of your diversified portfolio, then it's a great option to have. The other risk I'd probably say is obviously look at the platform that you're investing with. Make sure they're licensed, make sure they're regulated in the jurisdiction, and make sure you're covered. If you look at Bitget, we've got a proof of reserves fund. I think it sits at about $600 million. So it's basically our insurance fund. And if you look at a lot of the global platforms, you do get that sense of security or kind of guarantee against your assets. There's been a few incidences over the last few years with major exchanges, but they've come out at the forefront and they've owned it, and they've owned up to any kind of breaches or any kind of hacks, and they've made good on their proof of reserve promises. So I think the risk is obviously looking at who you're actually trading with, where you're holding those assets, and how you're storing those assets. And I think that would probably be the number one risk to look at first, is obviously where you're going to invest your money and what platform you're going to invest with.
Absolutely amazing. You actually answered my next question already, where I wanted to find out a little bit more about, if a CFD trader or a forex trader wants to, start trading cryptos, because there are still a lot of traders who haven't really started. How can they get into it, and how can they start trading or investing into cryptos without, overcomplicating their current investment strategy? And you already, covered the staking parts and various long-term opportunities that they can get into. So if there is anything else you want to add on that before we move on to the next part, I'm open to that as well. But I think you already covered a decent part of that specific question that I wanted to ask as well.
Yeah, sure. And I think, CFD traders, FX traders, they obviously understand the market, and they're not actually owning the actual underlying asset. So there's a lot of crypto CFDs as well that the guys can actually look at and trade without actually owning the underlying crypto asset. It's just understanding the price movements. So, they could obviously replicate that strategy across cryptos without having to buy the asset. I think for the FX traders, there's a lot of other opportunities. In South Africa, we see a lot of arbitrage firms really capitalizing on the arbitrage premium between us and some of the international exchanges. So we still see that as a great play between USD, ZAR, USDT. So for any of the FX traders that are out there and can actually look at that, there's a couple of different strategies that they could use to obviously just diversify what they're doing currently. So yeah, definitely a space for the FX and the CFD current traders to get involved in as well.
Brilliant. Callan, wrapping things up as we get to the end of the video, what would be the single best piece of advice for any crypto trader heading into what could be an extremely volatile but opportunity-rich Q3?
Yeah, so the single tip I like to give people is, treat this as any other asset class. I think you've got to be in it for the long term. I think especially from a South African point of view, we do have an investment and savings mindset. So, you're talking to people that are looking at long-term investments. And I think it's like anything, like Warren Buffett used to say, you buy it and you put it in the back of the cupboard, and you wait a number of years. I think if you don't actively trade on a day-to-day basis and you don't understand the volatility and the charts, I would look at it as, purchase it like any other asset, buy it, hold it. Don't expect to get rich overnight. But yeah, if you do want to diversify your portfolio and you want to get into crypto, then do look at it for the long term, and hold it. It's like any other asset class. There's going to be ups and downs, and you've got to expect that. But there is definitely growth in the long term. Look at the other products that are out there. Look at where the institutions are. Look at where the institutional money is going, and that does filter down to the retail clients. So you can actually start replicating that. And I think when we start seeing more of these ETF type of funds coming on board and making it a little bit easier for retail clients to invest who might not want to invest themselves, I think you're definitely going to see a shift in the investment approach. And I think there's definitely going to be a shift in allocations where you see investment allocations being allocated to crypto markets a lot more. So we're starting to see that trend already, and I'm sure that's going to grow over the next few years as well.
Callan, thank you so very much for that, and thank you for your time today. And then traders, that wraps up your daily market brief brought to you by ATFX Africa, the broker that gives you an edge in today's markets. If you want to learn more, simply head over to ATFX Africa and experience the difference for yourself. Until next time, stay sharp, stay focused, and trade smart.